Welcome to The Hash, everyone, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and we also have Will Foxley, Jen Sanasie, Ben Powers, and Zack Seward. Welcome to the show, everyone. And we are going to start off the show by talking about a little bit of controversy in crypto land. So, Ben, what have we got there?
Yeah, so Tesla had its Q1 earnings call yesterday. And as you remember previously, Tesla has bought up about $1.5 billion in Bitcoin. And on the call, it was revealed that they had sold $272 million worth of Bitcoin in Q1 with, I believe, kind of a net profit of $101 million. Now, upon this news, there was a kerfuffle for Elon Musk watchers in crypto Twitter, with one group saying this is prudent and another group saying, you know, this is weak hands. Why are you not holding on to this? And what is the larger implications? Now, Musk defended his actions, just saying that, no, you know what? We're actually proving liquidity within Bitcoin. But I want to toss this to the group. Zack, let me get your thoughts on this one. I think you edited it.
Yeah, sure. So, wow, this Dave Portnoy, Elon Musk exchange, just a meeting of the minds. Love to see that. Yeah, I mean, hey, man, Tesla bought a bunch of Bitcoin. They sold a little bit of that Bitcoin. People on the internet had opinions. I think that's pretty much the story. I don't know where I land on it. I mean, I see both sides of the argument. The fact that they took a little bit of money off the table to test liquidity of this market in being a big holder is certainly sounds plausible. But yeah, certain adherents of the hodl till the end we're not happy. So yeah, I mean, I'd say it both ways. This is corporate treasury adoption, and we're likely going to see corporate treasury adoption sort of be animated by different strategies around this asset. And the fact that we're seeing this run counter to some people's hodl belief is interesting. I mean, this is the evolution of Bitcoin as a corporate asset class, and the fact that this sparked a little bit of Twitter controversy was a bit fun. I don't know, Naomi, are you in the paper hands camp, or what's your take on this whole thing?
I mean, I think that Bitcoin hodlers, it kind of become this religion, right? And you got to think about why Tesla got into this. They didn't get into it for underlying beliefs and bringing down the existing financial infrastructure. They got into this because they think that inflation might be on the horizon and they wanted to hedge their bet. So they're really focusing on what's best for their company from an economic standpoint. And if you think about when they bought into this, you know, it was trading around 30,000 to 40,000 in January, which is where we think that Tesla got involved here. So it's like 55K today. And so they've made a bunch of money. They've done really well by their shareholders. You know, when you have these hodlers with their religious beliefs and they talk about bringing down the existing financial infrastructure, you know, I'm all for that narrative, but I want consistency. These people are mostly hypocrites. So I'm going to say that because they mostly still use their bank cards. They mostly still give all the power to the banks by keeping money in their bank accounts, by using a piece of plastic instead of crypto in their everyday lives. So I don't see these people detaching themselves from the existing financial infrastructure. So, you know, it kind of just screams hypocrisy to me. But Will, I saw your hand go up.
Yeah, I think another interesting thread in this conversation is that Elon, and correct me if I'm wrong, but he's wanted the ability for people to purchase Teslas from all over the US directly from Tesla itself. And it was very difficult to do that. There wasn't like a good payment system in place. And so that was his interest in digital currencies years ago. And that only became a reality recently with Tesla accepting Bitcoin for Tesla purchases. So if you want to buy a Roadster or whatever, you can send them Bitcoin and have it shipped directly to you. That previously wasn't possible. So I think the payments narrative kind of becomes alive with Tesla accepting Bitcoin, and they plan on holding that Bitcoin on their balance sheet. And to me, this is just a story of huge company comes in, buys a speculative asset, puts on the books, and wants to see if they can trigger a market runoff by selling a portion of their crypto. And I don't know when they sold, but obviously we've been going through some dips between 50 and 60K price range for the last few weeks, and maybe they sold during that period. But to see that Tesla has sold that much Bitcoin and the price didn't drop drastically is a very different picture than 2017. And the fact that the market has held up, even though Tesla sold off some of its Bitcoin, again, a very different picture from 2017. So to me, that's interesting.
It's also, sorry, Ben, go ahead.
No, I was just say I feel like this cuts both ways in terms of Tesla and working out. In a lot of instances, they still have over $1 billion of Bitcoin on their balance sheets, and this like substantially boosted their Q1 earnings in a way from last year. And so I think that's important, where they can say, all right, we can capitalize in the short term in some ways and like make sense to our shareholders and kind of boost our earnings and confidence, but also continue to keep this on our balance sheet as a stored asset class or hedge against inflation, Naomi, as you referenced. But I'll toss it over to you.
Yeah, I mean, I'm just going to run on what you were just saying there, that this has probably been a really good thing to boost Bitcoin's credentials, because, if you look at Tesla, people kind of looking to them saying, is this a good bet for them to get involved? Is this something other companies should mimic? As you said, Tesla has significantly boosted their Q1 earnings. They've done really well, and other companies can now look to that and say, okay, so they've taken some of their risk off the table and they still did really well. Maybe this is actually a good hedge against inflation and we should get involved. So I hope that it inspires other companies to look into diversifying their assets.
And I think
but, Jen, any
some
thoughts?
of the controversy.
Oh, sorry, Ben.
No. Jen, take it away.
I was just going to say, for our audience who are newcomers, I think we just need to explain what hodling is. I know everybody, we all know it, but sometimes I see people online just like, what is hodl? Is it the misspelling of hold? And that's obviously hold on for dear life. And so I saw a lot of newcomers on Twitter being like, well, should we not be hodling? Or because they're looking to Tesla and Elon for their, I guess, indicators or education in the Bitcoin space. And I think that everyone on the panel has done a really great job at explaining why people need to make their own decisions and stay educated on what they're doing. So for those people, just, stay educated and don't always just follow what someone like Elon Musk is doing on a corporation level.
Yeah, I think maybe that's where that sense of...
Go ahead.
I was just going to say, maybe I think where that's like sense of weak hands came from, because Elon's been such a booster of Bitcoin on Twitter, and that's drawn a lot of people to the space. And, similarly with Dogecoin, like these numbers have gone up in a lot of ways. And so to see him sell off after that, it could create some distaste for some of these newcomers that were like, wait, I thought you were talking about this as like the thing. Like, why are you potentially selling some of this off through your company? Exactly. But such is the nature of the game. Naomi, what do you have?
I was going to say that the term hodl has really changed meaning over the years. I have this great sweatshirt that says hodl. I was proud to wear it at a time when it meant to kind of not be worried about all of the market fluctuations in the meantime, because the long-term prospects of Bitcoin meant freedom. It meant, our decentralized future. So to believe in the future of crypto and don't get dissuaded by these market movements. But I think since then it's kind of changed to mean like never use it, never spend it, never change it with anything, which I think is a misappropriation of what it initially started out as. It seems that, Tesla, they're using it to make profit. They'll probably buy back in. We don't really know what's going to happen. But I think the idea of never using it and keeping this crypto like forever untouched kind of also goes against the ethos of what crypto was, which was a way to give people freedom in their financial lives. But let's change track here. Let's go to some interesting stealthy news. Zack.
Indeed. Let's talk about U.S. Bank. So U.S. Bank is a wing of U.S. Bank Corp, which is a really large financial institution headquartered in Minneapolis. They are suddenly becoming a crypto player worth watching. Today, we reported that they are launching a cryptocurrency custody product. They're also working with NYDIG on its proposed Bitcoin ETF. This comes just days after they announced an investment in a cryptocurrency infrastructure firm called Sanasie. So U.S. Bank, to me, this story is about this whole institutional Bitcoin thing going from Manhattan to Minneapolis. And we're seeing banks jump on this wagon hard right now. Again, with the custody, which I think is an interesting gateway for institutional clients. Hey, we'll hold the Bitcoin for you and potentially offer services from there. So the fact that this firm is entering the space in a much more concerted way is something that Ian Allison, my colleague, has been reporting on this week. And I thought it was quite interesting to see, not Goldman, not Morgan Stanley, not JP Morgan. We've seen a lot of those headlines, but Midwestern mainstream U.S. Bank doing this in a meaningful capacity. I'm going to throw this to Will. What does this portend for, the institutional embrace of Bitcoin beyond just the Wall Street Titans?
Yeah, great question. So I think in a larger sense, we're seeing the kind of return to the wildcat banking era of the 1800s, where you just have like institutions playing against startup banks. And that hasn't been seen in quite literally decades, where we have these new players moving into the ecosystem. And it's all because of the promise of digital assets. So Coinbase itself is a quasi-bank. And right now it doesn't have a lot of the banking charters that other banks have as institutions. But I wouldn't be surprised to see them get those charters going forward, in the same sense that I wouldn't be surprised to see a lot of these custodians do similar things, or they'll just be bought up by existing banks to be a part of the infrastructure for what is the future of money. And so I think it's very interesting. It's great for the consumer to be right here in the present. I think 5-10 years from now, we're going to have a completely different banking landscape than what we've had for essentially like the last 30 years or so, because we have new players moving in and they're pushing incumbents out. Incumbents are pushing back and trying to hop on the bandwagon and figure out what the heck is Bitcoin and why do people want it and how do we custody it, how do we use it, how do we earn yield on these assets. So it's a great time to be a customer. I'll get back to you, Zach.
Yeah, I think it was mentioned in one of the pieces that this OCC decision to allow banks to custody crypto in some capacity was a real game changer here. So it's interesting to see these established institutions sort of playing catch up with the crypto natives. Again, this is in partnership with a sub-custodian that was not yet named. So this is similar in some respects to maybe BNY Mellon working with Fireblocks to help its wealth management clients access and store Bitcoin with their trusted financial institution. So there is also opportunity here for the crypto native custody firms to partner with some of these major financial brands and get this out the door to more and more clients. I'll toss this to Naomi, actually. Do you think, what do you think? Is US Bank one to watch? Are we going to see other sort of mid-majors jump into this space and offer services along these lines?
Yeah, I think it's interesting to see what they're actually going to do. So the US Bank strategy chief, Christine Waldron, said that in terms of what flavors of crypto US Bank will be servicing, she said it can't just be a Bitcoin storyline. So I'm interested to see like what that means. Are they just diversifying in terms of cryptocurrencies? Are they going to maybe start to look into offering certain securities like, or tokenized stocks like Binance has? Are they going to be getting like adventurous? I'd be very interested to see now that banks are starting to get involved with the staples, what happens from there? Are they going to start to get more adventurous and broaden their horizons? I don't know, Zach, if you have any thoughts on whether that's way too soon and that's like 5 years, 10 years down the line, or whether that may be something we start to see.
I think that's a great point and a great question. It would be fascinating to see if, your local bank provided you access to DeFi lending platforms where you could earn far more yield on your assets than you would in their own savings account. So I think that's still quite distant as people figure out, again, sort of the plain vanilla offering here. But as we've seen time and again, crypto custody is really that first step. And then what comes next is potentially interesting and still very much an open question. I'll throw this to Jen. What are your thoughts on what this sort of signals to the broader market?
I wanted to say to Will first that I love that you take us on a history lesson, at least like twice a week. We get to go back in history with Will and look at what's happened and what's going to happen. I think this is a great step forward. Thinking about the future, listening to what Naomi's just said and Zach, what you've just said, I think it's a great step forward. It's great for kind of mainstream adoption. I don't have really anything super intelligent to add past that, but it's a nice, good news story. Ben, what do you got?
No, I thought it was just kind of interesting about this being sort of a mid-major bank in like a region that we might not think about as being particularly interesting in crypto or like the future of finances. And I think that, if they're doing this, it does speak, as we've mentioned time and time again, to some form of customer demand. And I think, in some ways, like Denver, for example, has been pitching itself as like a new Silicon Valley kind of thing. We're seeing a lot more tech start to congregate to the Midwest in some ways. I think this is an interesting data point just for thinking about this, because I think that while we think of Bitcoin and whatnot as like international and not, sort of regionally bound or anything, what regions are adopting it is going to be really important and speaks to the demographics that might be demanding it.
For sure. Another data point in the evolution to Bitcoin, not blockchain, from the big banks. Quite interesting to see. All right, well, we're going to take a quick break. And when we come back, we're going to talk about NFTs, digital collectibles in sports. It's something we talk about a lot, and it keeps happening. This time, the Golden State Warriors are doing it. We're going to go talk about Dubs Nation after the break. Stick with us on The Hash. Peace.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money in a live virtual experience. Consensus by CoinDesk. Register today.
Hey everyone, you're watching The Hash, where we bring you the latest and greatest in crypto and culture. Well, the Golden State Warriors are issuing an NFT set, and this might come as a surprise to some, but this is the first time that a US professional sports team is launching official NFTs. They're being auctioned on OpenSea and include both digital and real world products. So, Naomi, I'm kicking it to you first. You're just always going to be the first person who gets sports stories from now on.
You guys just troll me. You troll me with these sports stories. I mean, I think that what's interesting about this story is that it's the first time like a franchise has offered its own team licensed fair, right? Before you've had third parties saying we're going to promote things they might not necessarily have the logos or whatever. And there are all kinds of like third parties doing this, and now they're actually offering it themselves. So it seems interesting, but I mean, when it comes to NFTs, I just like, for any newcomers, I just have to say, okay, 2 words of warning, right? When you have cryptocurrency asset, when you have, non-fungible tokens, a lot of them are not stored correctly, right? We think of these things as being forever. They're on the blockchain. These are keepsakes. These are like baseball cards or whatever sports people collect and keep forever. I don't understand it. But we think that these things are immutable. And for a lot of the platforms out there, they're not. And because a lot of people aren't that technically savvy, they don't look under the hood of this. They just like the idea of it. They don't quite understand how fragile these things are. You've already had a lot of NFT platforms get wrecked and people lose their NFTs. The fact is that these platforms need to be storing these things in a decentralized way and also in a redundant way. By, just safeguarding things. IPFS is not enough. I mean, there's a lot of jargon terms for newcomers out there, but the main point is that just buyer beware and make sure you know what you're actually getting and how the platform is actually storing these things. But I saw, Zach, your hand go up there.
I think this one is interesting because it's a little bit like this carnival ticket metaphor that I've been working on lately. You have a ticket, you get a ride, and Danny Nelson and I were talking about this. He filed the story. We were looking at some of the early auction bids, and the ones that are attracting interest are these like experiential ones, right? Become a warrior for a day and get all these experiences and these access perks. The other ones, like the collectible ones, the normie NFTs, those ones aren't seeing much interest, at least in the early hours of this auction. So it is interesting to see the evolution again towards sort of this high-end experience, a higher price point, but also an IRL experience that if I'm a real diehard fan of the Warriors might be attractive to me beyond just having some stupid thing hashed to a blockchain somewhere. So it could be one of those shifts toward more what an NFT can do for me in the real world.
Correct me if I'm wrong, Zach. The championship rings only get distributed to team members, and whoever the team decides can have a ring, right?
I think it's like team members and like team staff. So like if you worked in the front office, I think you'd get it. That's historically been the case, at least in baseball. And I think it's also in the NBA. But yeah, apparently one of these things is like if you get like, I don't know, the cream of the crop, you get like the physical representation of the ring, which is pretty, I don't know, pretty cool. So,
pretty cool.
Again, it's just sort of this arms race. Like, okay, NFTs have become like a major thing sort of in the public imagination, and therefore the bar for capturing attention around these things is going higher and higher. So I think this sort of, to me, fits in that trend toward luxury NFTs.
Yeah, I think this is really...
Does it interact with the Dapper Labs problem, like the Dapper Labs product at all?
Not to my knowledge, no. I think it's just on
it's a different entity.
Yeah.
I'm wondering about like copyright issues though, because Dapper Labs had like the copyright to all these NBA moments, and now they have like a hold on their product lineup for like a singular team.
Yeah.
So that's kind of interesting.
We did note in there that like the players' likenesses are not involved here. So maybe there was a players union thing that stipulated that that could not be the case. We weren't able to get clarity on that. But, if you look at this offering, it is not, it's not video highlights. It's like a cool digital representation of like a championship ring or trophy. So yeah, good point.
And historic
but
ticket
this is, this is more of like, I guess, the team's version of what this could look like one day.
Well, I started it and I'm going to close it and change tracks there, guys. As much as I like to talk about sports, let's move over to a different area of NFTs. Binance is apparently launching their own marketplace for NFTs in June. So they're going to be offering non-fungible tokens. The aim is to have creators and traders of collectors. They're diving into all kinds of things. So it's not going to be just artwork. They're going to look into like music, games, sports, all kinds of things there. And then it's interesting because we're talking about these premium events in the sporting world, and Binance seems to be tagging onto that as well. So apparently the platform will be divided into two main parts: premium events and trading market. And so creators will receive 90% of the proceeds for the premium events, and Binance will charge a 10% fee for that. And the idea is that it will be able to highlight certain things in exhibitions, put them at the forefront, maybe bring more crowds in, more eyeballs to these pieces. And so it's interesting that we're kind of going to this curated world, these galleries and things like that. It is becoming, it is starting to parallel the existing art world a little bit. But I'll throw this to the group. Will, what are your thoughts on this new Binance platform?
So the first thing that interested me was that it's launching in June, which is kind of late. Binance is also kind of pretty quick as regarding exchanges, like compared to the Coinbase of the world, extremely quick. Compared to some other products out there, like also very quick. So I'm surprised that it's launching in June. That'd be about 6 months after the NFT craze started. So that seems pretty late. Might even be dried up by then. Somehow NFT bubble still has legs even in April, but 2 months from now, I really don't know what the market looks like. Maybe it's still kicking. For Binance itself, though, I think there is an interesting aspect with artists. So a lot of artists don't like putting their artwork on Binance Chain because they kind of see it as a ripoff of other platforms like Ethereum, because it essentially is just a copy and paste of the Ethereum code bank and then change a little bit on the back end to make it work for Binance to more or less kind of be able to push where it's going. So I don't know who's going to put their products on Binance Chain. So that's another question. And maybe we'll just see, like maybe people do choose Binance for other reasons than they're choosing Ethereum right now. But there's a lot of questions, I think, with this particular product. So interesting story. And I guess we'll see where it goes in June. But give back to you, Naomi.
Yeah, Jen, I'll throw it to you first.
Well, I just had a question for you, Will. Are these crypto native artists who don't want to interact with Binance Smart Chain? Because I think mainstream artists who kind of want to get involved in these experiences that Naomi's talking about probably don't know or maybe don't care. So just which artists are kind of wary of this?
Most Ethereum people do not like Binance Chain, and anyone who's in NFTs or has been for a while is pretty cognitive of Ethereum versus Binance Chain, and kind of like the mutual hatred there, just like very much to a thing. And maybe that kind of breaks apart, disseminates, or is like this aspect of a multi-chain future that we've talked about even here on the Hash a few times, where you'll have blockchains for NFTs, blockchains for DeFi, and they'll all talk to each other. And this could just be another thread to that greater story. But for now, I think most people who are minting NFTs know that Ethereum is the place to put those NFTs, and it's not on Binance Smart Chain. That might change though, so who knows?
But aren't most of the people who are minting on Ethereum right now out of money because of the gas fees?
They're pretty low, actually, again. So they're...
Oh, really?
I think I saw yesterday is like 50 Gwei for a transaction, which is like... I mean, Ether is pretty expensive right now. But I think that kind of adds to the use case for NFTs, right? If it's expensive to mint, then it costs a lot for an artist to create. And that kind of adds to the whole luxury selling point, I think, for some NFTs. If I was just able to like throw up a bunch of NFTs and it cost me nothing as an artist, that's not that great. But if it costs me something to put it on chain, then I think that kind of adds to to the use case or the value. So maybe you see like Binance Smart Chain kind of has like lower grade artwork, and then Ethereum is higher grade, and kind of diversifying there.
Yeah, because Binance Smart Chain is also like, it is fairly centralized in terms of what can be done there. And so there is control questions that are going to be inherent as part of any of this when you talk about sort of the, non-fungibility aspect of these tokens. But I do think it makes some sense in some ways, because if you're an exchange that's as established as Binance, you have an existing customer base, you're kind of folding this into service offerings that currently exist. I believe like mycrypto.com is doing this as well, but only based on invitations. And so if you're talking to the people who are kind of already in your garden, I think there might be an appetite for this, and you're just easing some of the on ramps. And so, whether you're doing it sort of like premium events, Naomi, like you were saying, or just sort of like a marketplace, like you can offer a suite of services to people that are already here. And I think that's kind of the target of this.
I think it's a big case of fish where the fish are. And I bet people aren't going to care, right? Like NBA Top Shot, it's on Flow blockchain. MLB did the Tops thing on the Wax blockchain. People are going to go where the people are and where the pain is minimal and where the friction is light. And I think that for that reason, the Binance NFT platform is quite interesting, right? I'm a big sports league, or I'm a big entertainment promoter, and I want to get my NFTs to as many people as possible. The idea that this integrates with existing Binance accounts then becomes quite attractive for like the long-term sort of plateau of usefulness that NFTs could like attain in the future. So the fact that they're rolling out this play, I think, is pretty interesting, and I'd be curious to see how they innovate on it going forward, because Will, as you mentioned, they move pretty quick.
For sure. Well, let's change track here and go to Will, and let's talk about what's happening in Iran right now.
Yeah. So again, a little bit heavier discussion than NFTs, kind of moving over to Iran, where the central bank is now allowing banks to interact with crypto, particularly mine crypto, and money changers can also use and interact with crypto for imports. So a few months back, the central bank gave out some guidance about the use of crypto and Bitcoin mining and other crypto mining in general, and said it was permissioned, but only the central bank could use it. But now they updated, gave some more clarification, and any bank or money changer can interact with crypto. And a lot of these places that people are getting crypto is from Bitcoin mining, because moving crypto in from the West or any country really is very difficult into Iran just because of sanctions. But if you can mine the crypto yourself, imports with it, well, then you're fine, because you create the crypto yourself and there's no sanctions on it beforehand. So there's a pretty textured conversation, because you have sanctions from the United States and other countries. You have mining, which creates crypto itself, and that can kind of get around these sanctions. And then you just have the central bank itself, which is moving into this pro-Bitcoin stance, and it's kind of different from other countries which are moving towards CBDCs. So there's a lot of conversations to be had here, but I want to give it first to Ben, maybe on that last point. You're seeing Iran kind of be pro-Bitcoin, while other countries are trying to make their own central bank digital currency. So what do you make of that?
Yeah, I think it makes a lot of sense for Iran, honestly. We look at the ways that cryptos are used in times of volatility to, kind of be a hedge or kind of be an escape from the infrastructure that exists or maybe failing in a country. I think that's maybe not the case in Iran, but I think what Iran's dealing with is a volatility of like international policies around it in a lot of ways. Like we saw, in some ways we saw the Iran nuclear agreement basically dissolved from the US's part, and the US stepped back from that and reimposed sanctions. And now we have the Biden administration currently trying to, re-engage with Iran on this and talk about what the next steps and re-entering into that agreement might look like. And if you're Iran and you're sitting there, you're like, this isn't reliable. Like I need to figure out something that can get around some of these sanctions and actually, potentially support citizens in a meaningful way. So they're dealing with a quite different problem. And I think it's really interesting to see this as like the US is the one creating a lot of volatility here for them. And in that case, a CBDC might make less sense, because you're not going to be interacting sort of internationally with other countries with that. But Bitcoin, you can do that in a variety of ways. So I think this is a really interesting kind of inversion, where a government's facing the volatility that we usually think of as the citizens facing, and therefore turning to cryptocurrencies.
I think also when you talk about sanctions, governments impose sanctions on other governments, and it's usually to try and force the hand of the government itself. But at the end of the day, the people that get affected are the citizens of the country. So especially when you have a country where the government may not care that much about the citizens, they're not necessarily going to change their policies because the citizens are being hurt. So for me personally, it's just great to see that we have things like Bitcoin that can help the citizens of any country, no matter what sanctions are imposed on their governments. Because at the end of the day, a lot of citizens have no control over who their governments are and still end up, bearing the brunt and facing the hard hand of governments like the US that are coming down on them. So I'm glad that this is a tool for freedom for people around the world. I'm sad that it enables bad people, but I think that the fact that it helps so many innocent people is just such a net positive for the world.
Yeah, and I think that's important. You talk about it.
Go ahead, Ben.
I just wanted to hammer home again the point that we often do on this show that it's just a tool, right? It can be used by anybody for anything, but it is a tool. And what's important is the use cases in which it's getting used for. But one use case alone does not Bitcoin writ large make. But Will, I'll hand it off to you with that.
Yeah. So a few other things I wanted to point out. So the Lee Quinn, who former CoinDesk reporter, and I think she's moving around doing a few different beats. And she did a really great piece. I think it was in Vice a few months ago on a Bitcoin miners being forced to sanction certain transactions on behalf of governments, and if that is feasible or not with how Bitcoin mining is set up, and how how the Bitcoin network itself is set up. So it doesn't even have to be specific to one sector of Bitcoin. It's very difficult to force this extremely neutral infrastructure to enforce political ends on behalf of governments. It's very difficult to do it. And it goes into, her piece went into a lot of game theory. I would suggest go reading it if you can find it. I'm pretty sure it was on Vice. But just in this Iran conversation here, we're seeing that a government is moving towards this extremely neutral infrastructure for moving money. It's the ultimate public good because no one can control it. And if we keep seeing that progress over the years, I don't see how central bank digital currencies are a better alternative, particularly when all the privacy issues that we've highlighted on this very show come to the front. So that's an interesting thread from this story. If you look at Venezuela and the inflation story, and that's why Bitcoin's always been touted. Well, maybe with Iran on this edge case, it's about neutral infrastructure for moving money around the world. And those features of Bitcoin slowly move into normal consciousness for the typical person who might not use it for any legal use case, but in 10, 20 years, they might have that purpose. They might just want that. So interesting to see the edges of the picture kind of get closer and closer and closer.
Yeah, and Will, I just want to jump in there briefly and say Bitcoin too has privacy issues. Let's be very clear about that. It is not a panacea for addressing some of the concerns around CBDCs. That being said, there's not sort of the control mechanism that could be exerted through a CBDC in this regard. So I just wanted to highlight that because, it's a whole mess of conversations we're going to be having around this.
Good stuff. The Iran story, really fascinating, from just the mining sector there to the government thinking through these issues, is really a really good topic. We're going to wrap the show with that. It's Tuesday, April 27th. It's been The Hash, where we talk about crypto news, why it matters, and why we think it's worth talking about. So that's it for today. I'm Zack Seward. We got Will Foxley. We got Jen Sanasie. We got Ben Powers. We got Naomi Brockwell. We will see you tomorrow. And if you'd like, stick around. CoinDesk TV at 3 p.m. Eastern is all about Bitcoin. All right, we'll see you then. Bye.
See ya.
See ya later.